All right, guys. Thanks for joining me. We're gonna go over this Facebook trade today. Um, and Facebook was down um, the day before and a gap down as well. This was a gap down, and then it sold off decently, came back up, and these are the levels I'm drawing right now on it. You have a pre-market high here, and then there's a pre-market low. Actually, I might have adjusted the pre-market low on this already. So let me just draw that line again. Pre-market low here. Here's the red to green line, which is where it closed yesterday, right here. This pink line right here is a 50% line, meaning that between the high and the low of the day before, this is 50% of the move here, okay? Let's see here. So let's move back over here now. Well, actually, I did mark the pre-market low there. Okay. All right, so coming in today, when I woke up, I said, oh, look, Facebook's down. I think that SPY was down too. It was down the other day. So I said, okay, well, maybe Facebook's going to go down again today. So let's, keep a look at it. As it came back up towards the open here, I noticed it's right at, I thought we'd get maybe a rejection here because this is the 200 SMA on the 5-minute chart right here. And this is the 50% line, and it's also at the red to green line right here. And as you can see, playing it forward here, got, rejected the 200 SMA and the 50%, and then it rejected the red to green, and then it got down, then it crashed pretty good here. So anyway, so I was trying to scalp some stuff in the morning too, just playing around, learning how to scalp stocks. But I know I was watching this Facebook thing because I wanted it to get back up here. Actually, let me switch to a 1-minute chart here. I had all my charts on a 1-minute chart, and this actually sort of screwed me up because I got into this thing way too early. So on the 1-minute chart, this is what I'm looking at. And I said, oh, we got the great rejection off the 200 here on the 5-minute chart. Sold off, went up, and I think, oh shoot, it's going down. It's below VWAP. I said, all right, I'm gonna take this short now, but I forgot I was on the 1-minute chart. Things were just going so fast. I should have waited on a 5-minute chart, but I didn't have this pulled up. So basically, my stop was going to be, just looking at this really quick, I said my stop price was going to be the high of day, right there. My entry was here. And then I was hoping to see, what happened here. Let's see, entry price. My entry is right here, on the break of VWAP here. But as you can see, what ends up happening, let's just go forward here. I end up getting stopped out right there, and I was down $100. I used up one of my day trades, and I wasn't very happy. But I think I end up, yeah, from here to here, I lost $100 because I took 6 contracts of Facebook, and I think it expired this Friday. Yeah, so I said, oh well. So I was willing to risk $100 here, and then as it went forward here, I know this rejected the daily, no, the 5-minute 200 SMA again, because it was coming down this way. I think it was right about there. So I knew it rejected it well again there. And then at that point, I said, okay, if it rejects there and we get back below, you know, this level here, maybe I'll try it again. So it went up, and then right when there's one, so once it started coming down here and it closed below here, I said, okay, I want to get in for sure. Try this again because I know my stop is going to be here, and I know that's a solid stop. You got the 50% here, you got the 5 minute 200, and I'll switch it over to the 5 minute chart again so you can take a look at that again. And here's that 5 minute 200 right here I was talking about. I've seen this a lot. Doesn't happen all the time, but it definitely happens enough where you need to pay attention to it. Because when it sets up like this, it sets up like something like all day. It's an all day setup here. So you see how we sort of rejected it here, and then we definitely rejected it right here. You guys see that?
Yeah.
And this is where my entry should have been, not down here. Let's see here. Let's readjust these lines here. So yeah, entry, stop, rejection, entry, and then boom, get the immediate flush. And that's a stop there. The stop is 71.15, 170.51, so that's 65 cent stop. If I pull up my options, and I'm just sort of going over the whole trade, how I sort of figured it out, how I wanted to trade it. So I got into Facebook. I traded, and I'm looking at the 114s here. I believe I traded. I wanted to put, and I got the 160s. And so the way I figured that out is that I took 93. Well, back then I think it was okay. Let's say I know the option. My deltas was 14 cents. Okay, my deltas was 14 cents, and if you look back at my entry, let's see. That was my stop out on six contracts, and then I went back in again. I think it was a different account. Let me see here. Hold on. Let me go back over here. What time? 7:54. So I bought them at 70, I believe. 70 cents. So the way I figured that out now is that I calculated if it's 14 cents on deltas and I divide that by 70, it's a 20% return for every dollar it goes down. Because every dollar it goes down, it's going to go down delta, correct? You guys understand that? Delta. For every point that Facebook moves, it's going to move delta. Okay. And then, so if I know my stop, this was 14 cents at the time, and I know if my stop was 50 cents away, right? If my entry is here, 170.64, my exit is 171.17, so that's about 70 cents away. So that's probably 10 cents. 10 cents in terms of delta. Does that make sense? Per contract. Yep. So I'm going to be risking $10 per contract. So I'm back in four contracts. I'm risking $10 per contract. So I'm risking $40 on this trade. And my goal is to try to get back down towards pre-market lows or something like that. And then, yep. And so immediately it worked for me because, I've seen this setup before. We have a lot of resistance here. We have a 200 SMA, and it just worked out perfectly. I made that trade. I set my stop, and then I went to work because I had to go to work. I got back, was making decent money. It bounced right off of. I wasn't making great money, because it was low deltas. But it was within my risk management. You know, so as this popped up off of pre-market low, it went up, sort of rejected VWAP. It came back down below. I said, okay, I'm gonna add here again. So I added more shares, and then as soon as I added, it went against me, and I knew this was gonna be my stop right here on the rejection of this. So I got in here. I would get out here probably at a break even, but I'm hoping this thing's gonna go down even more. So I add here, it goes up. I'm almost at break even. A little bit upset. It starts to reject. It begins to get back below the 9 and this macro pivot, and then I add even more. So now I'm like 13 contracts in, and my average, yeah. I mean, if you don't believe me, but yeah, because I was like, hey, this is going for me. So I added what? If you look at the times here, you know, set I don't know, see 602. So I added 2 is 4, added another 4, and then added 5 more after that. And this is all just using one day trade now, okay? So if you day trade, you can add into the same position and then exit once, and it's only one day trade. Okay, or if you want, you can add once big if you know exactly where your stop is, and as you go down, you scale out. Two contracts, 2 contracts, 4 contracts, whatever it is, and it's still only one day trade. Does that make sense? Yep, yep. So you can do it one either way. You can scale in and one out, or you can do one big large one in and scale out, and it's only one day trade. Yep, exactly. That's correct. That's correct. Yep, 2 day trades. Yep. Or if you trade two different strike prices. If you trade two different strike prices, and you still trade Facebook, then they're considered two different day trades if you close them out both. Okay. So anyway, that's good information to know. Let's see now. Anyway, okay, so I added here. It came down to here. I know my support is. I know this is a major macro pivot down here, and I came so close to trying to sell this because right here I'm up $345. On my $1,000 account. So, so that's 30%. Well, minus the 100, I'm up 24%. Um, in one day trade. So that's pretty good. And then so it came back up, and I'm like, oh shoot, where's my stop going to be? And anyway, so I ended up looked like it was gonna once it broke this level here and it came back down. I said I'm just gonna get out because I think it's gonna come back. It might come back up here. If you look at the 15-minute chart, I think the 9 EMA was the next spot to come back to retest. So this is going down here, but once that 5-minute chart broke that, I think it's going to go back up to the 9 EMA, and then by that time I'd be pretty much almost break even, and then I just wanted to make sure I ended the day profitable. So I made back my 100, and I made another maybe I think I made another 100 or something like that. So I made 10% on my account today after taking that initial loss, which was totally stupid. Anyway, but here's the trade. I don't know if you guys, if you look back in your texts on the on Focus Trades, you'll see that I called this other trade out here. Um, and it was really a trade off of VWAP. Because once it went up to the 9, I said, hey, look for Facebook to reject off of the 9 EMA on the 15-minute time frame. It did not do that. It powered through that, and it went right up to VWAP. Let's see here. Uh-huh. So here's what happened on Facebook. Actually, let me, I'm gonna duplicate this window real quick. Uh, yeah. Yep. Mm-hmm. Mm-hmm. All right. Thanks for putting that in there, Gil. Appreciate that. So what I call this here is a reversal, but it's a continuation of the trend here. Okay, right? Because Facebook is down the last 2 days. It's not going to go down forever. It's a huge candle here with the big wick, so you're going to get the reversal. The best spot probably to get short is back towards VWAP, and you have this macro pivot here. Okay, and so you get the nice green candle, you get the doji. That's a very important sign there. Okay, and then you get this nice big red candle here. So as you get up to this level, you want to switch to your 1 minute chart, I believe. This is the 1 minute chart right here. And if you look at it, what you're going to see here, you got a double top right here, okay? And then you get a break back below here. You know, you get sort of a downward pressure. It gets above VWAP, it sells off, can't get back above 169.22. And then you just begin to get this little bit of, you know, trend line here coming down off of that, right? Just ever so slightly, okay? But this is, to me, this is totally legitimate because you are trying to enter in at a very significant spot. If this is, because this is a significant spot right here, right? This is VWAP, there's a macro pivot, you have the consolidation, right, of, you know, $1.42 or something like that, I believe. And so if anywhere this is going to turn around, it's going to turn around right here. Okay? If you're a day trader, this is where it's going to turn around. And then it works out good if you're an intraday swing trader too. So the best spot to enter in, and then what you want to do is you one of the indicators you want to use is probably a MACD. And if you look at this MACD here, if we can get it to load up. Yep. And so this is what you're looking for here. You can get in a little early here, and this is how, if you want, you can sort of build into this position. You could do a starter position here a little bit if you want. You know, if it breaks above here, that, you know, then you're out. But a starter position up here is okay. You get this nice good flush down here, which then causes the MACD to 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 come, I guess, to cross over this orange line. and then it sort of chops around here a little bit, comes back and retests this macro pivot perfectly right here and rejects. So you know that's trading technically correct. Does that make sense? That is technically correct. So now if you want to enter here, your entry is 169-ish. Your stop is the double top of the consolidation, which is 169.22, which is 17 cents away. So if you can see these notes here, stop is 17 cents away, target is low of day and more at 167. So if you look at this right here, I did a little math here. The reward is $1.42. And so if you divide that 17 by 142, that's an 8-to-1 risk versus reward. So that's how you figure that out. Does that make sense? So then boom, then we're just off to the races here. And then I called it out. If you look back in your text, I say, oh, hey, this thing just rejected VWAP nicely. Look for, and I think I announced it right through here. I said, look for the 5-minute non-EMA to push the price action through this pre-market low right here. So as it came down here, it found support, got back up, right? Came back down, and it broke early. And what I used to do is I broke here, I'm adding in here, and then it would only come back up and I'd get stopped out here because I didn't want to take the loss, only for it to reject here and go down. And so to me, if this breaks early, great. If you want, take a little bit of profit down here and wait for this retest. You get this retest and it fails off of this perfect little spot here, add back. Mm-hmm. Yeah. Mm-hmm. Okay. Yeah. Mm-hmm. Yeah. Mm-hmm. Yep. Mm-hmm. Yep. No, that's all good. So anyway, do you have any questions on this? I mean, I think oh, and then the way I figured out how far this would go down today is that I took basically the length of yesterday's high and low, which was about $4. And I just said I took the high here and I just went down about $4. So 171.17 minus $4 is going to be 167.17, right? Actually, I think it went lower than that. No, I had to I closed mine out here for a smaller profit because once it broke here, I pretty much knew I was gonna go red on my position because I added so much here. I was hoping to get a super flush, but didn't get it. I should have just got out here, but I got out here. I didn't want it to go. So in this, I had a feeling it was gonna come down to here again, but as much as I knew the setup, I couldn't let my green trade go red. Yes, yes, I was. Well, my average price was, probably down here somewhere now. Even though I added four here, but I added nine here, nine here at this one. So it brought my average way down, like the 63 or something like that, 63 cents. I can't remember what it was, but it was, it brought it down quite a bit. So if I had one more day trade and I saw this, I would have started a position again here, and I would have loaded up here again, and I would be looking for a break of this to get down here. That's what I would have done. But I ran out of day trade, so I couldn't do that. So if I get back to this chart here, I'm gonna take this candle right here. That is the day before, the length of the candle the day before. So if I take that and I bring it down to here like that, so that is possibly the range that it could go down to the next day. So go down this day. So it pretty much went, this is 3/4 right here. This line right here is 3/4 of the day before's move. This would have been, 100% of the day before's move. So you're talking, you know, it pretty much moved the same amount that it did the day before. And because you're only talking, how many cents? You're only talking like 60, 50 cents. And then here's that major macro pivot where it found the support here and went back up. So yeah, this would have definitely been my target, you know. Uh-huh. Yeah. Mm-hmm. Yeah. No, I think there's definitely a potential for it for sure. All right. Yeah. Anyway, I'm gonna stop the recording here. So thanks for joining us.